What's going on, guys? It's me, Moosh Effect. How y'all doing? Little day in the life video. In the end, I'm gonna be explaining about liquidity. What is liquidity? How can we find liquidity sweeps in the market? And how can we use liquidity sweeps as our advantage to win trades? Guys, it's currently 10 a.m. and I'll be looking to trade GJ. And let's see how it goes out. Alright guys, it looks like that I'm not going to take a trade because it's already been like 1 hour into the session and price ain't doing much. And I wanted it to get to these areas of liquidity, but it didn't. And price ain't that volatile. It's probably because it's Monday morning, so yeah. But hey man, this is just the reality of trading. You don't always find a setup, that's why you gotta stay disciplined. But the plan right now is to go to school, do a test, and then I'm gonna head to the gym. And from there, I'm gonna come back home and edit this video for you guys. So that's the plan. Let's see how it goes.
Borracho viendo tus fotos, me duele ver que tú seas mejorado. No tienes días grises, ya no te duelen las cicatrices. Y yo pensando si decir.
Alright, that's about it. I didn't record much because I didn't charge my phone. Let's get back into business. I'm gonna teach you now how to spot liquidity sweeps, etc. Yeah, stay tuned. By the way, right now it's Monday, and the teaching part was recorded on Friday evening. So yeah, I just wanted to tell you that. So yeah. Okay, we're back in the charts. So let me explain you the whole purpose of this video. So it's an educational video. Really important topic, liquidity sweeps, and essentially how we can find liquidity and liquidity sweeps in the markets, how we can use it as our advantage, etc. Yeah. By the way, next video is gonna be about breakup structures, so stay tuned. Breakup structures, really important topic for us SMC traders. So yeah, stay tuned, bro. Okay, so what is liquidity? Basically, liquidity is an area that has a lot of buy and sell orders by traders, and basically most people get stopped out over there. These big market movers like banks and institutions, those who actually move the market, they want to seek liquidity, and they use liquidity. They sweep liquidity in order to move the market in the direction that they want, because they have massive orders that needs to get filled. And with liquidity sweeps, they can essentially take out traders and continue its direction where they want. For example, let's say we're bullish, market is going up, bullish. So in this case, these big market movers, they have orders down here, and the price is going up, but they have these orders down here that needs to get filled, aka liquidity. So what they do, they take out that liquidity, and then they can continue its direction to the upside, continue its trend. That's why you see usually the price doing it's not going completely up all the time. It's just doing this. The price corrects itself, and yeah. And basically, we SMC traders, we can use that as our advantage because we know where liquidity lies. So basically, we can just, if we're bullish, we can just basically wait for it to sweep out those areas of liquidity and then buy, in this case, if it's bullish. And obviously, you need more confluences after that, like a breakup structure, which is coming next. Because breakup structure gives us confirmation that it's gonna flip their direction. So yeah, in order for banks to fill their orders, they need to sweep liquidity. So yeah, they're gonna take out sellers or buyers, and yeah, and people get into the market and they take out people out from the market. So yeah. So how essentially can we find liquidity? Well, it's actually quite simple. It's basically in every time frame you can find it. It's these most prominent looking highs. We know what's a high now because my previous video explained that. If you haven't watched that, go watch it. Alright, so I'm gonna start from higher time frames. So in higher time frames, liquidity is really important, and it's basically liquidity in higher time frames lies on untouched highs and untouched lows. That's where liquidity lies in higher time frames. Also in lower time frames, but remember, higher time frames always hold more power. So essentially, these wicks, these lows, they are liquidity. These highs, it's liquidity. Okay. For example, this high, this is weekly time frame. Okay, so yeah, this high hasn't been swept currently, and this high has not been swept. This high has not been swept. And what does it mean? What does sweep mean? What does sweep mean? So, for example, this right here has not been swept, but now it has been swept right here because it sweeps this. It goes above it. And a sweep is the wick of the body, the wick of the candle. This smaller one, not the big one, the body, literally sweeps it. So yeah, so in this case, this also gets swept, and this gets swept. What happens after that? We break structure right here, continues down, and this right here, this liquidity didn't get swept, so that means this is also still liquidity. It's liquidity that has not been swept. So okay, as you can see right here, perfect, bro. Look, here it gets swept, boom, we break structure, and we continue down. Cool, that's cool. You literally see that. And again here, then this liquidity, as you can see here, gets swept, continues up, goes down. Okay, and this is also liquidity, gets swept, and now it's going down. Okay, literally so easy to spot. And this is also liquidity right here. This is liquidity. This is liquidity. Every low and high that has not been swept in higher time frames is liquidity. Okay, then let's go to daily time frame. This is also liquidity in every high and every low because it's a higher time frame. Okay, let's go to S&P. Liquidity sweeps and liquidity can be found in every pair, every time frame. So, but still, higher time frames hold more power always. Okay, liquidity. This is liquidity. We're in an uptrend. Okay, we broke structure right here to the upside. We're in an uptrend. We leave this liquidity right here. Also, okay, leave this liquidity over here. Gets swept, continues its direction to the upside. Okay. All right. We're making higher highs, higher lows. We're bullish. We make this liquidity, this low right here. What happens? Sweeps and break structure, continues up. This is higher time frame, so it counts. And yeah, like it's easy to spot, man. Right here, also liquidity sweep. Takes out this, continues up. Okay. Here, the same thing. We're currently bullish right here. We sweep this, break structure on a lower time frame. Also here, we'll continue up. Simple stuff, man. Simple stuff. Same thing here. Liquidity. Okay, this liquidity gets swept, continues up. And lower time frame, same thing. This is liquidity. This is liquidity. What happens? This is also liquidity right here. What happens? We're here. We'll take out this liquidity right here. We continue direction. Okay. What happens here also? We have liquidity right here. Sweep continues down. Consolidation. And yes, sir. Okay. This is also sweep, continues up. And here, the liquidity that I marked out gets swept, plus this fair value gap also getting filled, and this whole fair value gap also getting filled right here. So that's even more confirmation. But what I usually do is when I see a liquidity sweep on a higher time frame, after that I go to a lower time frame and seek for a break of structure, like on the 5 minute. It depends what pair are you using, but yeah. And this is also liquidity that has not been touched yet. Right here, also liquidity that has not been touched. All right. And currently we're booming. Okay. Here also, it's literally everywhere. Liquidity lies everywhere. This is liquidity. This actually breaks below it, so this is technically not a sweep. But okay, I switched to 1 hour time frame. So here also, what happens here? Perfect. Liquidity lies over here. This low gets swept. We would go to a lower time frame to look for a break of structure, and it most definitely happens because this is 1 hour, and I usually look for break of structure in S&P 1 minute. Depends if we're in the session, but yeah, sweeps out these, also takes out this fair value gap. Oh, this also takes out it. Okay, looking good, bro, I ain't gonna lie. So what would happen here? This is some retail traders stop loss right here. Okay, the big market, the banks, they want to take out those traders out, and then they can continue its direction. Okay. What also happens here? This high gets swept, goes a little down, then some traders enter here and they get also swept, and then it continues up. All right, man, liquidity is found in like everywhere, man. Look at this. This is also liquidity. This high right here, this is liquidity. Gets swept, boom, continues its direction. Okay, and what about this? This is also liquidity. This is now the recent liquidity. Sweeps out these, boom. Man, this is simple, bro. You just gotta know where liquidity lies. Okay, so I'm gonna lie, it can be difficult at first, but I'm just gonna show you an example how I trade, so and how I use liquidity. So essentially, I mark out the session open. So here, this is stock exchange open, New York Stock Exchange open, and hold on, let me just do I have a replay? Yeah, I'm going to the replay mode. All right. What I do, I mark out. Let's say, yeah, we're bullish right here. Okay. Okay, yeah, as you can see, we're bullish on the daily time frame. We're also bullish on the 4 hour time frame. Okay, so that's good. we also sweep out this liquidity right here, this low. So what I do when the market opens, before the market opens, I sweep every liquidity and low that I see. Hold on. Okay. So this is where the market opens, right here. So before that, I'm gonna mark out liquidity. This low. Low also counts as liquidity. I count it as a liquidity because it sweeps something. I want it to sweep out these areas. Okay, as you can see, I mark out everything that has not been swept. This has not been swept. All right. This has not been swept. I take out everything right here. This equal lows. This is liquidity, area of liquidity. Okay, like this. Okay. And when the market opens, okay, if it doesn't sweep, it's okay, but okay, it does sweep. So then I go in a lower time frame when it sweeps something, okay, this liquidity, areas of liquidity, these lows. So then I go to a lower time frame on S&P because S&P is quite volatile after the session opens. So I go to the 1 minute. I seek for a breaker structure. As you can see, we sweep it right here. We got a breaker structure actually right over here. This is a breaker structure. Next video coming up, so don't worry if you don't know what is a breaker structure. But right here, I would essentially enter from this breaker structure right here, or this order block. Order block is also coming up later, so don't worry. But this is also an order block, so you can enter off of that or this breaker structure. Let's say I would wait and be patient. I would enter from the order block. Where's my stop loss? It's below. You should always have some breathing room, but I would do it like this. Okay, like this is also liquidity, so a little bit below that. It depends. Okay, where could our first take profit be? Essentially this area of liquidity, these equal highs. All right, and more here. This is also a liquidity, so that could be this could be my trade. Decent trade. So I would enter. Okay. Well, as you can see, what happens? It sweeps out this again. Once again, that's why your stop loss needs to have a little breathing room, because the price may actually want to sweep your stop loss again. So have breathing room. Okay, so I would enter. Okay, in this case, my first take profit gets hit. So after my take profits get hit, I take 50% off of my position, and then I I close this stop loss to break even like this. So if it goes down, I don't lose anything, and I already made money, bread right over here. So now it's like just free cash coming in like this. Let me just skip a little bit. Okay, that's okay, and there we go. All the take profits would have been hit. So yeah, always remember to have breathing room. It's really essential. And I had it below this liquidity. And yeah, that's essentially it. So yeah, there you saw it, how I use liquidity sweeps as in my strategy. But in higher time frames, I also look at the liquidity. For example, here, like I showed you, this in the higher time frames, I saw that this low was swept, and then it continues up, and we're also bullish. So before market opens, I know that we're bullish, I'm looking for buys, so I mark out buy side liquidity, buy side lows, these lows, you know. So yeah, man. Okay, so let me just write Where does liquidity lie? Okay, now where does liquidity lie? It lies just, oh shit, just above equal highs and below equal lows. It also lies above recent highs in a trend and below recent lows in a trend. Okay, and also highs and lows in on a higher time frames. And remember that untouched liquidity is still valid. So that means that untouched liquidity, like this one, hasn't yet been swept. That means it's still valid. Okay, now it gets swept, but we don't get a break of structure to the downside, so we wouldn't enter on that. Okay. Yeah. And all the way here, right here we do get a break of structure to the downside on the 15-minute, and this is the high, and as you can see we rally down. So it's interesting. And here we break structure to the upside, so it's cool, and we rally up. It's interesting. And as you can see here we got a sweep and a break of structure, and we rally down. Okay, that's real cool. So yeah, after, as you can see right here, so what I mean valid, right here this liquidity gets swept, so this isn't valid anymore because it's already swept, so you don't need to mark it out. But this is liquidity that has not been swept yet, so it's valid. And once this gets swept, it's not valid anymore, but you know how it goes. So, and remember this, where does liquidity lie? Just above equal highs and below equal lows. It also lies above recent highs in a trend and below recent lows in a trend. So in this case, we're bullish on the daily. So where does it lie? Since we're bullish, it lies these recent lows, because we're bullish. It lies here and it lies here, and highs and lows on a higher time frame, that's where it also lies. So this is a high time frame, this is daily, so it literally lays all the way in every high and every low. Okay, cool. As you can see, this is a high on a higher time frame, gets swept, continues down, and this is also a low on a higher time frame, gets swept, continues up. Cool. Okay, but yeah, remember that only untouched liquidity is valid. For example, this is valid, this is valid, it hasn't been touched. This is not valid. This liquidity right here, this low, is not valid because it got swept, but as you can see, it got swept, it continues up. This is also not swept. This is also not valid because it already has been violated. Yeah, as you can see. So yeah, that's about liquidity. More videos incoming. And yeah, this is also valid because I mean this right here has not been swept. This right here has not been swept. This right here has not been swept. So yeah. but this is not valid anymore. This right here, this got swept and continues up. Cool, man. So yeah, man, I hope you sort of understood what I said. You know, if you didn't, watch the video again. Remember that liquidity sweeps, basically, it's so important in these markets because literally moves the market, because the banks need to sweep out other traders, other people, so they can get the best price, and that's essentially it. But so yes, sir, see you in the next one. Peace.